Welcome back. Investors have been saying they are waiting for a little pullback in the market. Well, they just got a big one. The broader average is down more than 2% today. The Dow dropped nearly 400 points. So where are these opportunities? Joining us now are Steve Dudash from IHT Wealth Management and David Pearl from Epoch Investment Partners. David, what are you picking up here? What's on the list?
Well, you know, the market's been up on bad news is good news. Today, obviously, the Fed is talking about better news. The really good news is the U.S. is the best economy in the world. Consumers are strong. Consumer spending's up 3.5%. We just heard about GDP getting stronger. So you want consumer-oriented companies and consumer discretionary.
Apple here.
Apple. Your iPhones, on average, are getting older, so whether you think this is the greatest iPhone or not, it's time to replace it, and next year's a big one. And Apple's one of the cheapest stocks in the stock market, 11 times earnings.
But it has been. What about Comcast?
Well, Comcast, for the first time in years, actually has video subscriber growth. And so internet's strong, video's strong, and consumers are spending money, and maybe they won't go out to eat as much if the economy did slow, but they're certainly keeping cable.
And what about Allergan?
Allergan is a transformational story. It is actually now the fastest growing major pharma company. It got rid of all its legacy businesses just in July, and they were on TV, obviously on CNBC yesterday, talking about the fact they're not a price gouger.
Yeah.
They have real growth. Their biggest drug, by the way, is Botox. It is not paid by any government reimbursement.
Just yet. Steve Dudash, what about you? What are some of your picks here?
Like the energy sector, the markets have gotten pulled back today because of all the things going on with the Fed. And can I just say, I agree with Guy, you need to raise rates. It'll never be perfect out there. But
right,
energy sector today, I know.
We're going to talk that to death, don't worry. So what are what's on your shopping list here?
Energy sector, buy the dip, take advantage of the fact that people are pricing in oil going lower, which it can't go too much lower. Take advantage of that. The balance sheets on these companies are looking pretty good. Because right now that they're just breaking even profitability, you saw when it was down in the 20s and 30s how quickly it had to bounce back up, because at that price, not only companies are losing money, but countries are losing money, which pulls back on the production flows because they can't do it anymore. We have the flexibility now with what's been going on in the U.S. to shut down wells at a quicker pace and open them back up at a quicker pace. So it's not going back to $100 a barrel, but finding that range and taking advantage of it.
Guys?
Look for the dips right now.
Just interesting not to hear anything about the banks at this point, or financials, whether from a cheapness perspective or a rates perspective.
So banks really are the cheapest sectors statistically. They're at the lowest price to earnings, price to book. They are so interest rate sensitive, you have to make that call. So it's not just short rates going up because you'd have a flattening spread. You need spreads to widen. So not really the Fed raising short rates 25 bips. You need long rates to go up a lot for banks to do really well. However, they're priced really effectively. If you're looking for income, financials are more attractive right now than consumer staples or utilities because they've really lagged.
We got to go, but Evan, what about you? Do you have any picks here today?
No, I don't believe in stock picking really, especially now.
Sectors.
Yeah, I believe in sectors, and I do believe that if you think the market's going to be higher, you have to be with the financials and probably the energy sector, because if those don't go higher, the overall market is not going higher.
Steve Dudash, thanks for joining us. David Pearl here at Post 9 as well. Some ideas here amid this big sell-off. Well, how